Good morning. It is Thursday, February 12th, and the markets are, well, they're on a knife's edge. Over the next 48 hours, we are staring down the barrel of a rare convergence of risks that we're calling the triple threat. Look, this isn't about panicking, this is about being prepared. So let's get right into it.
Tomorrow, Friday, February 13th, is the deadline. We're facing a perfect storm of fiscal instability, a huge inflation data release, and a major fracture in the commodities market. So, I want to tell you exactly how I am positioning my cash for it.
We have less than 48 hours until these events all hit at once. The clock is absolutely ticking. And the whole point of this explainer is to give you a clear, actionable plan, a plan to protect your capital and make sure you have liquidity through the volatility that's almost certainly coming. So what makes this moment so different? It's this triple threat. It's not just one thing we have to worry about. It's three distinct pressures all hitting the market at the exact same time. This is what we've been talking about. This post-consensus world, a market where all the old rules about inflation and political stability just don't apply anymore.
Okay, so before we can build a strategy, we have to really understand what we're up against. Let's break down the three pillars of this thing to get a crystal clear picture of the battlefield.
So here's the roadmap. First up, you've got the political risk, a potential Department of Homeland Security shutdown. Second, the big one for the economy, the January CPI inflation data. And third, this really wild structural shift in commodities that we're calling the Great Divorce. Let's tackle the shutdown first.
Pillar number one is a potential partial government shutdown. Now, most of the government is actually funded for the year, but one really key department is just hanging in the balance, and its funding deadline is midnight tomorrow.
So, you might be asking, how in the world did we get here? Well, as you can see from this timeline, Congress basically kicked the can down the road in late January. They passed a funding package for everyone else, but slapped a temporary 2-week funding patch, that's a continuing resolution, or CR, on the Department of Homeland Security. And guess what? That patch runs out tomorrow night.
So why does this matter? I mean, really, who cares? Well, a DHS shutdown isn't just political theater. It has real-world consequences for critical agencies we all rely on. We're talking about the TSA at every airport, FEMA's ability to respond to disasters, the Coast Guard, and even our national cybersecurity agency, CISA. This just pumps a huge amount of headline risk into a market that's already incredibly tense.
Okay, let's pivot to pillar number 2. This one drops at 8:30 a.m. Eastern tomorrow morning, the January Consumer Price Index, or CPI data. Now, this is not just another inflation report. It includes annual revisions and updated seasonal factors, and you better believe the market is watching for any weird distortions hidden in the numbers.
Now, this is where it gets really interesting. Look at the forecast here. The market thinks headline inflation is going to cool off, but core CPI, that's the one that strips out food and energy, is expected to stay stubbornly high or sticky. And would you look at energy services? Still climbing. So, a hot report, anything over 2.6% on core, could easily send bond yields through the roof. A cool report, maybe below 2.3%, could signal the Fed is ready to pivot. The bottom line is, the market is coiled like a spring, ready for a huge reaction either way.
And that brings us to our third and maybe the most complicated pillar. What's happening in the precious metals market? We're calling it the Great Divorce, and it's this deep structural fracture that has been building for months. This table just lays it all out, plain as day. We are seeing a catastrophic split between the paper price of silver that's traded on Western exchanges, like the COMEX, and the actual physical price that people are paying for real metal in Eastern markets like Shanghai. And get this, even after that massive paper price crash a couple of weeks ago, the physical premium actually got wider. This isn't just speculation, folks. This is a full-blown inventory crisis. The vaults are being drained.
All right, so we've defined the three pillars of risk. The big question is, what do we do about it? How do we position ourselves? Let's get to the strategy. This is your scenario-based game plan for the next 48 hours.
The theme here, the word of the day, is discipline. The era of just passively investing and watching your money grow, that's fading fast. We absolutely need an active, a defensive, and a strategic approach to get through the volatility that's right in front of us.
So here it is, the single most important recommendation. For conservative portfolios, I am strongly advising a tactical increase in your cash allocation. We're moving from a standard 10 to 15%, all the way up to a defensive 25 to 30% position before tomorrow's events. This is our primary shield.
I want you to think of this cash position as your own personal vault. It is not about hiding under a rock, it's a strategic tool. It acts as a buffer against a potential fire sale, and just as important, it gives you the dry powder, the capital, to deploy when the volatility hits its peak
and incredible opportunities pop up.
Okay, this slide right here is your playbook for Friday morning. It's a simple if this, then that matrix. Let's walk through it. Scenario 1, the triple heat. That's a hot CPI report and a shutdown. The plan is simple. Hold your cash. Don't you dare try to catch a falling knife. You wait for all the forced margin selling to flush itself out. Okay, scenario 2, the policy pivot. This is what happens if we get cool CPI data and a funding deal. That's your green light. The dollar probably weakens, and you deploy that tactical cash into quality assets. All right, scenario 3 is the gridlock trap. CPI is hot, but they managed to get a deal done. This means the Fed stays aggressive. Here you focus on safety and income, move cash into short-term treasuries. And finally, the deflationary shock. Cool CPI, but a shutdown happens anyway. In that case, you stay defensive, hold your cash, and maybe overweight conservative sectors like healthcare.
Now, let's zoom out a little and look beyond the noise that's going to happen on Friday. Because this triple threat isn't just a short-term blip. It's pouring gasoline on a much larger structural fire that's changing the markets.
I want to hammer this point home because it is so critical. The Great Divorce is this massive split between paper promises and physical reality. This is not a temporary glitch, people. This is the birth of a new kind of market, where having the actual physical stuff in your hand is king.
And that really brings us to the core of the strategy. Holding all this cash right now, it isn't about avoiding risk forever. It's about surviving the immediate, headline-driven chaos so that you are in a position of strength to capitalize on the fundamental repricing of real, strategic assets that has to follow all this madness.
So here it is, your final actionable checklist. Number 1, rebalance to that 25 to 30% cash target by the end of the day today. 2, if you own precious metals, call your broker and verify that it's physically backed, not just some paper contract. 3, do a quick audit of your defensive sectors like utilities and healthcare to make sure they're actually stable. And 4, this is crucial. Tomorrow, if you're trading at all, use limit orders, not market orders. It'll protect you from those insane volatility spikes.
And just to put this whole thing in context, I want to be clear. This is not another 2008-style solvency crisis. The banks are in much better shape now. The problem today isn't toxic debt. It's a deleveraging event. It's being driven by margin hikes and this structural divorce between the paper and physical markets.
I'm going to leave you with this thought as we head into the storm. The next 48 hours will be a test of discipline. And those who can resist the urge to react to every single headline, who can hold their cash through the Friday morning noise, they're the ones who will be in a commanding position of strength come next week.
This triple threat really is the ultimate test of our preparation for this new era. So the final question I have for you is this. In a world that is increasingly built on nothing but paper promises, is your portfolio truly prepared for the arrival of physical reality? Be ready.